We are talking about the creation of Africa's latest state. South Sudan becomes independent on Saturday. And we were talking now a few minutes ago to Kingori Githinji in Kenya, and he was saying Kenyan banks are heading into that space. Have you heard of any Nigerian banks looking at South Sudan?
Well, good morning. We haven't quite as yet heard of any Nigerian bank moving into South Sudan at the moment, but I believe a number of Nigerian banks have looked into Pan-African expansion, the likes of UBA. Obviously, the cost of expanding across Africa or Pan-Africa has increased their cost of doing business, and I guess these banks have to weigh, the benefits vis-a-vis the cost of increasing their number of branches or offices across South Sudan. So I guess a business case will have to be done, and each bank would have to look at that on a case-by-case basis and then take a decision from there.
Sure. Let's come back at home to Nigeria. Now we have some newspapers reporting that Ngozi Okonjo-Iweala, we remember she was finance minister 2003 to 2006, is back as Minister of Finance. How would the markets view that?
I think it's an excellent news for the market. Ngozi Okonjo-Iweala is a renowned technocrat. She was the current MD of World Bank prior to her appointment as the finance minister. I think generally it's good for the market. She has an excellent track record. She was a key decision maker and a key driver in Nigeria's debt relief between 2003 and 2006. Where Nigeria wiped off close to $36 billion of debt. So I believe that her experience from holding that same position previously, as well as her experience from being one of the key senior executives in World Bank, would be a very good development for the Nigerian market in general.
Will Aganga be missed?
I'm not so sure that he'll be missed so much. However, I believe that he's been redeployed to the Commerce Ministry, which would also require his services. We're of the view that Aganga is also equally competent, and we believe that the more technocrats that are in government, the better the policies that will be implemented.
Yeah. Now, in general, how are the markets making of the new cabinet appointments? What's your view in terms of all the people who have been now put in place in the key economic ministries?
I believe there's been the good and bad side. Generally, I would say that the market, obviously the equity market and the financial markets generally will be more encouraged when they're more technocrats. But I believe the president has tried to strike a balance between the politicians that supported his campaign, as well as against the technocrats that were appointed to run some key ministries in government. So I think overall is good. However, I would have to wait to see implementation of policies before we make a more accurate assessment of what exactly is going on.
Yeah. Now we're of course talking about a market that has been under pressure for a while now. Do you see these appointments perhaps giving the market a lift? I mean,
you're right. The market has been bearish over the last few weeks. Over the last 4 to 5 weeks, we've seen a 5% decline in the market, which is on average around about 1%. I think even though from a pure valuation basis, there are a number of very attractive stocks that are trading at a significant discount below their fair values, investors would generally like to see some implementation from cabinet ministers, whether it's to conclude the passage of the petroleum industry bill or the privatization of the power holding company of Nigeria. I think that developments and progress in that regard will be significant drivers for future performance in the equity market. So we'll have to wait and see how well the new ministers do in terms of implementation.
Yeah. Now, this is a market, of course, that's also been undermined by news coming through. I think it was earlier this week that we had 48 companies that had been suspended from trading on the stock exchange because they have not yet released their results. Now, 48 companies in any part of the world is a large number of companies to have failed to release earnings and comply with stock exchange requirements. How damaging has this been for confidence in the market and also just in general for the Nigerian stock exchange?
I think to the contrary, in our view, I actually think it's a good thing for the market. It shows that the regulators, there's no longer business as usual, and the regulators are taking, their regulatory policies and ensuring that companies comply with some of the rules and regulations more seriously. We've seen some blue chip names even on the list, including Dangote Flour and MBC. And we believe that it sends the right signal to the market that, other companies, other listed companies have to take compliance with publishing their results a lot more seriously. So overall, I think it would have good, short to medium-term benefits for the market.
But Shuaib, we're talking about this action coming 3 months after the expiry of the period by which these companies had to have released their results. So these results should have come 3 months after the end of the financial years, but now we're getting action coming in 3 months after the expiry of that deadline. So it's half a year since the results were released.
I mean, I do agree with you. I think that the regulators have to be more steadfast in terms of implementation of the rules and regulations of the market. So I do agree that perhaps the decision should have come a bit faster. But as you're aware, we have a new NSC DG, and obviously it's taking him some time to settle down. But I think, we have to give him the benefit of the doubt. I think he's on the right track. I think, the decision is actually the right decision. And I think over time they'll get better at, coming up with, sanctions a lot earlier.
Yeah. Let's talk about the results that we saw coming through from flour mills of Nigeria yesterday. Now, those numbers, let me just quickly run over them. We had profit after tax down 44% to 16.9 billion shillings, naira, and we had turnover up 15.6% to 238.8 billion naira. Now, those numbers appear to have been below some analyst estimates. What's your take?
I think, the result is both good and bad. I think from the top line, if you look at the turnover, as you mentioned, it was up by 15%. So well over, close to 230 billion naira in terms of turnover. And I think that's a good sign that the company is actually growing. The cash flows coming in, their business actually doing well. If you look at the bottom line, as you correctly mentioned, the numbers are down, between 30 to 45%. If you look at the PBT and PAT, and I think the key, or what was mainly responsible for that, really was the cost of sales, which was up by, close to 24%. So I think one of the things that has to be done is, I guess the research analysts will sit down with the management, with the senior management team of flour mills to know why exactly the cost of sales went up and what was responsible for that. But I think overall, all in all, flour mills is still an excellent company. It's the #1 flour miller in Nigeria. It controls close to 50% market share. I think their cash flow numbers are robust, as it has been shown on the turnover numbers. I also think that it has an excellent management team. So overall, I'll still put a buy on flour mills, and we'll still buy. I think that the downward trend yesterday would be very short-lived.